Hey everyone, Russell Gray, co-host of the Real Estate Guys radio show, and we're here with a special edition of Tax Talk. And today we're going to be talking about oil and gas. Oil and gas has been one of the premier tax breaks available to investors for a long, long time. And a lot of real estate investors understand the concept of tax breaks through investing, but they don't necessarily understand oil and gas. And so today we're going to talk with an oil and gas guy that goes back a long, long way and a CPA that specializes in these kind of tax breaks. So joining me today is Bob Burr from Panther Exploration. We call it PanX, and he's got, I don't know, Bob, what, you go back like to the 1970s in this business?
Sure do.
Yeah.
Yep.
And Danny Looney, who is a CPA who Bob has been working with for many years, who really understands the tax side of this. So guys, thank you for joining me today.
Thank you.
So today is a lot less about talking about the deal side. Bob, you wrote a special report for us, kind of oil and gas investing 101. And so if anybody's interested in kind of understanding how deals work, and we'll talk a little bit about that today, but they can send an email to oilandgas@realestateguysradio.com. That's oilandgas@realestateguysradio.com. And we have a link to that down below also. And you can get a copy of the report so you can kind of get your mind around what it is to invest in oil and gas, because there's drilling, you can buy producing wells, there's things in equipment, there's a whole bunch of stuff that if I talk too long, I'll expose my ignorance, but that's why we have Bob. But what we really want to talk about today is the tax breaks. And so, Danny, I'm going to start with you. And can you just give us the high level view of how tax breaks work when it comes to oil and gas investing?
Yes, you bet. For a long time, there's been the benefit of intangible drilling costs, and intangible drilling costs are the substantial portion of the cost that you incur when you drill an oil and gas well. And the IRS has given us a special break to encourage investment in that area, in that they allow 100% of the deduction of those costs paid or incurred, and you can deduct those in the year that you pay or incur them, and they are available to be deducted against ordinary income so long as you own that interest in the way that they design it to where it's allowed to be deductible. You also get the benefit of the break of lease and well equipment, which is the other major portion of the expenditure that's incurred. There, we've always got the benefit of the depreciation that we get from that. But in the current tax law, they also give us the benefit that 100% of that equipment is now deductible. So it's an unusual time in oil and gas in that at the moment, 100% of your cost related to the drilling of the oil and gas wells is basically deductible through intangible drilling cost or the depreciation that you get from equipment. At times, there's a portion of it that may be leasehold cost or capitalized cost related to an offering, but the oil and gas portion is basically 100% deductible now. The key there is to own that interest so that it's not subject to the passive loss rules.
Okay, so this is huge. Obviously real estate investors, especially part-time real estate investors, struggle with taking full advantage of the deductions available in real estate because you have to be classified as a full-time real estate investor. And sometimes the IRS challenges that. Sometimes it's hard to make that case. But if I heard you correctly, Danny, you're saying that these intangible drilling costs are 100% deductible in the year that you make the investment against your ordinary income. Is that right?
That's correct. In fact, they're 100% deductible by all parties if you so elect to deduct them on your return. The question really boils down to, are they deductible against ordinary income because you own your interest in a way that's exempt from the passive loss rules? Or are they deductible under the passive loss rules, which means they would be grouped with other passive losses and still deducted there? So it's possible that they can still be deductible in the current year, even subject to the passive loss rules for those investment partners that have substantial passive income.
Gotcha. So that's obviously interesting to real estate investors too, because sometimes we get to a point where we have generated enough passive income that we don't have enough losses and we've got to go purchase another building. And, sometimes it's a good time to do that and sometimes not so much. So, Bob, let's jump over to you and let's talk a little bit about just kind of the basics of oil and gas, because, a lot of times people who are outside the space think of oil and gas as I don't know what you guys call that, wildcatting. Forgive me if I get it wrong, but you're out there and you're drilling, hoping to hit something. And then if you miss, then you lose. So you get to write off whatever you put in. So maybe, whatever the write-off is, but you lose more than you make. But there are other ways to do oil and gas where you don't face so much risk. Can you kind of talk about the different kinds of oil and gas investments that still qualify for this type of deduction?
Yeah, Russ, I really believe this is what separates various companies, longevity of companies. Is really very romantic to talk about drilling big, deep wildcat wells. You see the old movies where they have the gushers and this sort of thing. The truth of the matter is, when you drill a 10,000 or 15,000 foot well, you have 3D seismic, you have all the geological tools available to man. You got about a 1 in 10 chance of hitting that well. Maybe better, but not really. I mean, it's tough. And I've seen so many guys come in and hit a big well and think that they have got this deal figured out. And I look up 5 years later and the old boy's wherever he is. It didn't work out for him. I'm not saying that you don't do that, but I am saying you manage that. We never take a full wildcat big well. We'll take 5%, 10%, to give us some numbers, economic numbers, should we be successful. Knowing all along the chances are we won't be successful. All our partners understand that, but they also understand that it's worth that little shot. And then you get to the real meat of the oil and gas industry, and that's getting into areas that when you drill wells, you've got an 85 or 90% shot of making oil. Right now, we're in a situation down a little southwest of Houston that we're drilling. You've seen the Ring of Fire video that Brad Simmons does for us. Brad's been in this particular area for 35 years. Now, what's significant there, and this is very important, I won't go into a long-winded story. I know time's limited here. However, your engineers and especially your geological team, you take a guy from East Texas, Panola County, Joe Powell, my old buddy. You send him out to West Texas. He's not worth a flip. He does not know the rocks. These people learn the rocks, meaning that porosity, you can't produce a well without porosity. Well, in East Texas, you can produce a well at 12% porosity. West Texas, it may be 16. We drilled a well one time and we had like 9% porosity in East Texas. Everybody said, you got a dry hole. Joe says, I'll acidize that, boys, and then it'll pay you guys out in 4 months. 23 years later, I sold my little portion for $400,000 to Atlantic Richfield. The man knew the rock. Brad knows the rock. Brad knows the area that we're in. And so it's critical for us, especially for tax sheltered dollars. I had a fellow years ago, I said, you can write it off. And he said, boy, if I want to write it off, I'll give it to the Boy Scouts. I want to make money. So it's very, very sensitive that we put this money into developmental type drilling locations. We're doing a 5-well program right now for the year end for our tax. A lot of our partners need they have to have tax write-off. And these wells are sitting right in the heart of the field. I mean, you can throw a baseball and hit wells. So, it's sort of like a straw in a cake. That's how it works. We're in a very fractured area. There'll be these wells will have anywhere from 5 to 8 pay zones in them. So we're not shooting for one zone. So it's as close to, it's as conservative as we can get, providing our partners the product they need to shelter and make the shelter effective. in my business, if we get them back their money just for the tax savings, we made them 35% on their money. That's not bad. I think we'll do a heck of a lot better than that. We're tying it into another product that we'll go into later on. But it's not, the oil business is many different facets of it, and you have to figure out the one you want to pursue. I've been doing this for, since 1973. So I know the deal. I know what partners need. So we feel very secure with the product that we have for the tax shelter season. December, by the way, we'll raise more money in December than the rest of the year combined because everyone's taking advantage of the tax write-off.
Yeah, well, we're recording this actually in December of 2020. And so one of the reasons we were anxious to get this out is a lot of folks out there are looking for these end of year moves. What can I do with only 3 or 4 weeks left in the year to grab a big tax deduction? And so in our Tax Talk series, we looked around at our network and said, who do we know who's got things that are available that make sense? And so I wanted to do this with you guys for that exact reason. And of course, there's two parts of confusion. One is, we're real estate investors and gosh, do we really understand oil and gas? But you've been on our summit. You've been on our show. You've spent, Bob, a lot of time educating. You've written the special report that people can get if they send an email to oilandgas@realestateguysradio.com. And so, we like it because it's a real asset. And it's fundamental to the economy. There is no economic activity without energy. And until some new technology comes along that can be deployed on a mass scale, energy is oil and gas. And so because of that, in spite of, the ups and downs of the economy, somewhere in the world, oil and gas is going to get consumed like food. And if you can produce it, then you have an opportunity to sell it and make a profit. When there's ups and downs, as there always are in commodities and markets, just like there are with real estate, there's good times to get in and good times, to kind of sit out and wait for your opportunity. And so, Bob, it's no secret that in 2020, we've seen quite a bit of volatility in the oil space. And so, based on your, 50 years in the business almost, talk a little bit about, if you will, kind of where we're at in the cycle and whether it's a good time in your opinion, or whether it's a time to kind of just take a wait and see approach.
Well, I have a advisory board member, Mr. Ed Hirs. He's a top writer for Forbes, just a brilliant college professor there in Houston. But he's been on our board. He was on one of Brad's boards years ago. The guy's very, very sharp. And he said, without going into detail, Burr, with the way the political arena is going right now, expect oil prices to go up and go up and go up. Now, that's not me saying that. I've seen the cycles. I've lived through the cycles. When I first got in the business, it was in when we had gas lines in 1973. So I've been through every cycle in the business, and oil always comes back. Right now, for example, last month, or this month, we got $2 a barrel more than we did last month. I think we're looking at, I don't know, it's supposition. We all know that. I don't like to throw those things out there and act like I've got the toy to tell me where it is. I do feel it's very healthy. I feel like that the world, look at our economy. I mean, God, just look at what's happened even through the pandemic. We're at all-time highs. I mean, that's got to tell you something. We're a powerful, powerful economic group, and the world has got to have oil. So I feel it's very healthy. I feel like we went through the purging process. That's why we were fortunate enough to get this property. We were able to get it for 10 cents on a dollar. We took advantage of it, which we do. I'm not ashamed to say that. We try to make it work for everybody, but we're in it to make money. But right now, for the folks, the only thing that concerns me, and Danny may want to talk about this somewhat, is the fact that we could lose this tax write-off after this year. I mean, that's a possibility. Let's capitalize on it now. Can we capitalize on it by putting more into intangible and having a loss carry forward? Danny, I don't know the answer to that. I'd like for you to expand on that because that's critical. Folks may want to go ahead and maybe shelter money for next year. through the efforts of this year. I mean, but as far as the price of oil, historically, the record speaks for itself.
Yeah, Danny, before you go there, and Bob, I think that's a great point, because taking a loss when you can get it and then using it when you need it, those are kind of two different tactics. Those are tax strategies, and that's a fantastic point. But I think the main thing is that oil is a permanent fixture, worldwide commodity, biggest commodity in the world. It tends to respond well to inflation, meaning that when they print lots of dollars and currency around the world, which they're doing, anything denominated in that currency tends to go up in price. That's why we like real estate. And so when you look at being able to take advantage of the tax break, and in your case, Bob, I know you like to go into places where you're not speculating on whether the oil's there. You pretty much know the oil's there. There's risk, and and I'm sure you and your team explains that to investors, excuse me, when they come in. But it's not necessarily as risky as a lot of people think, and you mitigate a lot of the financial risk simply by taking that big tax break, which is really what we're focused on. So, Danny, talk a little bit about what Bob mentioned, the idea that maybe here we are in 2020, somebody sees this and they kind of rush through the window of opportunity, grab the 2020 tax break. Is that useful to them in the future? Or if they were to take it next year, could they bring it back into the past? How does that work?
Well, for the most part, the tax deductions are available in the year that the costs are paid or incurred. So the incentive all along is to be able to speed up and take those deductions early and not have them prolonged through numerous years to come. So in the past, the depreciation was always spread over 7 years, but the intangible drilling cost is incurred today. Now, one of the options that you can make an election on is if you take an investment in oil and gas and have your intangible drilling cost, then there is an election to where you can elect, even though you've elected previously to expense intangible drilling costs, you can take a portion of the current year intangible drilling cost and you can capitalize that and amortize it over a 5-year period if you feel like that's better for you. So there is that benefit of investing in the oil and gas, having the right to deduct it all. After you take a look at your tax picture, if you feel like I have enough deductions for this year and I'd like to spread a portion of it over 5-year period, you can take any portion of that IDC and spread it out. So it does give you that ability.
Nice. Okay. So who qualifies? You talked about ordinary income. Are there any limitations? If you make too much money, you don't qualify, or if you do a certain type of work, or is this really available to everybody? There's a lot of high income earners out there that are looking at closing out their year and they're going to be looking at paying a big tax bill unless they can find a way to do something. This is a time of year where a lot of people are making charitable contributions, and there's nothing wrong with that. But if you can pick up a tax break and make an investment at the same time, great. So is this available to everybody, or are there limitations?
Well, the deduction is available to anyone, and the deduction is a benefit to you based on your tax bracket that you have for that particular tax year. So those deductions are available to all of us.
So last tax question for you, Danny, is timing. I'm guessing you have to get all this done. I know there's some investments you can make by the time you file and it still counts. Usually those are, retirement contributions. Do you have to have this thing done by the calendar year, or is there another date where you can push it out into the future?
You do need to make your investment in this calendar year. The benefit is that under the programs like Bob has, there is the ability for you to make the investment in December, before December 31st. And then so long as those wells are, the drilling begins on them before 90 days, then all of that IDC is still deductible at 12/31, even though the project hadn't begun. So that's still a benefit, but there is a requirement that you do get your money in and make that contribution before the end of December 31st for it to count in this tax year.
Gotcha. Okay, so I think that I covered everything really that I wanted to cover. I think that, if people are out there and they're watching this and they're like, gosh, I need a tax break. I'm either going to give a bunch of money to charity, or what kind of an investment can I make? It's probably too late to go purchase your next apartment building and get that in for the bonus depreciation, by the end of the year. So this is something you can act on pretty quickly, that I don't think is too difficult to understand. Again, Bob's written kind of a primer on oil and gas investing, oil and gas at realestateguysradio.com. We brought Danny on because we think it's important for you to understand from somebody qualified to have an opinion. And you may have a great CPA, but if this isn't an area that they focus on or practice in, sometimes some of the nuances aren't available. And so, Danny, I think you're available to talk with folks if they're interested in learning more about the tax side of things, or talk with their CPA. We'll put Danny's contact information in the show notes below also, so that you can reach out there. But I think the main thing is, if you're interested in doing this, then, contact Bob and company at Panther Exploration, learn a little bit more about what they've got going. You need to understand, of course, the risk. We're not pitching any particular deal here. We just want people to understand that this is something that's available. People have been doing it for years. We first got interested in oil and gas because our friend Robert Kiyosaki was an oil and gas investor, and he was, he made a lot of money. He was like, I need tax breaks. I want to invest in something real. I don't just want to give my money away. And at the end of the year, when you don't have time to move on real estate, oil and gas can be a great thing for people that can move quickly. So, Bob, I mean, this is December 9th when we're recording this 2020. And of course, if you've seen this after the first of the year, there's still opportunities going to be in 2021, even if the tax law is changing. We don't know what that'll be. You just have to take a look. But if you're watching this in December, is there still time, Bob, from your perspective, to be able to get somebody kind of up to speed, know what's going on, and get them into something to take advantage of this by December 31st?
Yes, Russ, we're on 24/7 here. Everyone knows that, even though it's the holiday season. Our boys, myself, we work, and we're here 7 days a week, damn near 16 hours a day. We have to be. We'll have that much influx of people calling in. You got to take your time with them. You have to explain it to them. You have to let them know that Danny is there. If their CPA would like to visit directly with Danny, I work him pretty hard this time of year also. But we want to be very careful, extremely sensitive to making sure that each individual understands it. It's a beautiful vehicle. You can shelter a lot of money, as the old fellow said years ago. But if I want to write it off, I can give it to the Boy Scouts. Your folks, we call ours wells drilling down on the dome. It's more mining oil versus drilling for oil. We know it's there. We're looking at the zones. We know the wells. That's a mechanical thing. You can run into failures. You have a blowout. You can have some things that mess up the deal. But overall, the guys that's been there for 35 years, I have to give my partners every tool as far as safety, as far as engineering, as far as geological, as far as operations. I mean, this team that we have together, they've been together for about 27 years, all of them. My son, Justin's down there with them. Right now, he's in the field. We just put on a well that's trying to kick on us, blow in hard. I mean, it's a very exciting time. But we will take our time with the partners. They call in. No pressure here. We want them to explain it to them. We want them to understand it thoroughly. And we'll go from there. And it's that simple. And I wish everybody a Merry Christmas.
That's awesome, Bob. One of the things that I like about oil and gas is that right now we're in a situation where we've got the pandemic, the lockdowns. We don't really know what the ramifications on employment, the ability to pay rents are going to be. But you really have to get the geography right when you're buying an apartment building or houses or whatever, because you have to make sure there's local jobs so that the tenants have a place to work and you have cash flow. But with a commodity like oil, you can sell that stuff anywhere in the world. There's global demand. So if China is booming and they need oil, the oil goes there. If India is booming and they need oil, the oil goes there. If it Canada or South America, and of course the U.S., I mean, there's just you don't have to get the geography right. And if you buy right, and I think that, Bob, I know I've been tracking with you all year. You backed up the shopping cart, when that oil price dropped, and you've picked up some
Absolutely.
really impressive programs. And of course, now that oil is starting to come back, both because of inflation and the economy's opening up around the world, I think there's some real opportunity here. So if you're looking for a tax break at the end of the year, I encourage you to contact the guys at Panther Exploration and find out about that. If you're curious how the tax things work, reach out to Danny or your CPA. Make sure you understand. But for those of you that this is your first time doing it and you've written off the idea that you can get a tax deduction against your ordinary income, this is something you can do that will give you a tax break against your ordinary income, not just your passive income. And that's why it's such an exciting opportunity. So Danny, Bob, really appreciate your time today. And I look forward to seeing you guys again soon. Have a Merry Christmas, Happy Holidays, and a fantastic New Year.
Thank you, Russ. We appreciate
Thank you, Russ.
Thanks, guys.
All right. Bye-bye.
Before you go, three things. Number one, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number two, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number three, share. Please share this information with friends. Help them get on board this bus. Help them protect and preserve their wealth to take advantage of what's going on in the world today. All right, thanks so much, and we'll see you in the next video.